Okay, everybody, the countdown just finished, so it's time to get started. Welcome to the session today. Today we're getting together to do short-term trading. Okay, so let me maximize the slide here so we can all see what the session is about today. Again, official welcome to the session. Today is 25 of February 2019. My name is Jose Blasco. I will be your guide today. And as I just said, we are getting together to do short-term trading. Okay, so AutoUFOs get together short-term session today. We're going to be looking at the futures markets using lower time frames. We're going to be looking at spot forex, currency pairs as well. And we will be putting all together in order for us to execute those trades, okay? But before we start, as we always do, disclaimer, the following videos, clips, and demonstrations are for educational and instructional purposes only. Traditive provide these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our products. Here we go. So we got the introduction for the day, and we got a chart in front of us, which is obviously the most important part. Okay, so today again, short-term trading. You can see in front of the screen, we have TradeStation, we have the AutoUFOs app active. You can see the little flying saucers here. And notice how on the upper left we are looking at the NQ, which is the Nasdaq Futures contract 2-minute time frame, and in the below part we got the 15-minute time frame of the same Nasdaq contract. Okay, so what are we going to be doing today? Again, planning on trades to be executed intraday, but just because every time we do sessions together, of course some of you repeat, okay, and join us, and well, as the name of the session suggests, we get together, right? So apart from that, some of you are also new and you are getting together with us today for the first time. So very quick, as a recap, healthy recap, I would like to explain what I'm looking for, because the trades I'm about to plan are trades that we look for what I'm about to explain. Okay, basically what I'm looking for is to have an edge in the marketplace. An edge means a higher probability of success. How are you, Mark? How are you, Chris? It's good to see you. And higher probability of success will be done by using the AutoUFOs, but on top of that, we're gonna combine a few more things to make ourselves rule-based, to make ourselves mechanical, to make ourselves organized, methodical, etc., etc. Okay, so notice what's happening here. Okay, in the bottom part of the chart, let me maximize it. We have a 15-minute chart of the Nasdaq. Okay, and you can see that multiple times price came very close to the average and bounced out of the average, came close, surpassed a little bit the average, bounce of the average, came close, surpassed the average, bounce out of the average. So why is that happening? Well, that is happening because of one reason. Okay, and the one reason that moves price directly is orders to buy or orders to sell. Okay, and the reason for the orders to be there in the first place, we have no idea. But as traders, we really don't need to know the reason why the orders are there. What we need to know is that the orders are there, because if the orders are there, it will give us a trading opportunity. Okay, now every time the market approaches one of those moving averages, many times, you will see a reaction to it and price move away. Why? Because often those moving averages are used by very powerful computers running pretty big size accounts. Those computers obviously belong to big institutions that may even collocate those computers in the same location as the exchange. And when price gets to one of the averages, those computers start buying. And when those computers start buying, what are they injecting in the marketplace? Well, they are injecting orders, okay? And the ones we care about are the ones that are still unfilled. So if we can get filled in front of them, then the orders will get filled after we got filled, and price will move with us on board. So the idea is to catch those movements, okay? Relying on a moving average, because those moving averages may imply that a computer is likely to buy there, or it's a possibility, okay? So it increases your odds a little bit. The moving average as well, because it's calculated as a mathematical formula that averages a bunch of candles on the left. Well, if the moving average is moving up or price is above the average, it means it's an uptrend. If price is below the average, it means it's a downtrend. Okay, and we know trends tend to last. They will not last forever. Okay, but of course, if the trend is going up, but we were to have a major red circle, major red flying saucer, that will mean that we have many sell on field orders, and therefore this market will probably reverse the trend and move in the opposite direction. Okay, but the idea is, as long as we don't have those red UFOs and we have the average, so we have a trending market that is likely to continue because the trend tends to continue. And whenever price comes to the average, it would be time to buy if you wanted to replicate what those computers do. Now, having said that, it's a little too hopeful to only rely on the computers, because they may buy, they may not buy. So it's an added probability that computers may buy, but you want to rely on something more solid than only a possibility. There is no certainty in the marketplace, that's for sure too. So we need to think in terms of probabilities, okay? But at the same time, a possibility is not high probability, right? So we need something more probable. And what is more probable? Well, is the UFOs. Okay, UFOs, as you all know, is an app that when it runs on those charts, that app has identified on-field orders that are already in the marketplace. So if you were to buy where those UFOs are, you are buying where we know we already have on-field orders in place. And if those UFOs were to line up with the average, well, now you would know that you have on-field orders waiting to get filled, plus a possibility where an additional set of orders may kick in thanks to those computers. So we know we already have on-field orders thanks to the AutoUFOs. That's really when you get the probability. But as an extra tool that will help you even further, a moving average, which is such a simple thing, may be quite helpful, because mechanically, you are forcing yourself to follow a trending market if that is your choice and part of your trading plan. So if you choose to do that, you are forcing yourself to follow the trend. And on top of that, you are possibly joining those computers too. So you put it all together, and basically combining the moving average from the 15-minute time frame together with the UFOs on the 2-minute time frame is likely to produce a better result than trading the UFOs on their own from the 2-minute time frame. I mean, you could certainly do that, but the reason why I'm not proposing to do that is because probably it's too many trades. Notice 1, 2, 3, 4, 5, 6. How many UFOs you got there? You got so many, isn't it? So maybe it's too much. Okay, and if it's too much, we need to find a way to look for the higher quality opportunities, and higher quality in trading means higher probability. And the explanation I just gave you hopefully resonates, because that's an explanation for us to add a little bit of probabilities, extra probabilities on our favor. So ideally, I would have wanted to buy there. Okay, let me draw my circle in a better way. Okay, right there. Okay, let me do a better job drawing the circle, because I went way too far to the left. Here we go. So ideally, I would wanted to buy there where the average is, okay? But again, I don't want to do it just because there is an average. I want to do it because there is a UFO. So what was the price of the average at that time? Well, the price of the average at that time was 71.3386. So let's call it 71.34. Well, notice what we had at that time. Okay, if I use my background, my workspace tracking button here, this will allow me to position my cursor in one place on the upper chart, and now I can very easily see where is that time in the history of the market, where is it on the other chart, which is a different time frame. So notice how that UFO coincided with the time when price came to the moving average and there was a UFO. That would have been your entry. Okay, we have planned trades like that almost every single week. Today I didn't have the chance to get in before the session started. So hey, that's trading, my friends. You cannot catch every single trade, but many times, if you have seen the recorded sessions or you have been with me before, you have seen some of those trades, and that would be a position where you could be, as we speak, at this moment in time. If you took this trade, you would be 16 points up on the Nasdaq if you had taken this trade. Okay, so that's the rationale. Okay, that's the rationale. And I wanted to spend a few minutes just to give you this explanation so everybody understands what I'm going to be looking for, because I'm going to be looking for those trades from the beginning of the session to the end. And the moment we find an opportunity, I'm going to be placing the order in the system. And if you want to do the same, go for it. Okay, of course, you decide the size of your trade. You decide if you want to use paper money or real money, demo accounts, paper money accounts, real accounts, live accounts, all those things will be your decision. But certainly, if I find an opportunity, I will be ready to put it in my account, and obviously the information will be given to you for educational purposes, but these are actionable trading opportunities. Okay, guys? So anyway, so let's go for it. Okay, and by the way, something I would like to do as well, let me open a little Word document here. Something I would like to do as well, it's to look for those opportunities in different time frames. Okay, so I'm going to have a Word document here. Okay, I'm going to have a Word document so we can make a few notes. I'm going to make a few notes related to time frames. Okay, and the reason why I'm going to do that is because, for example, today, if you miss this trade, you know, in using the 15-minute time frame and the 2-minute time frame, it's probably going to be difficult for you to be able to join. Why? Because the moment price moves away so far and so nicely, if you are on board, it's very nice. But if you're not on board, what's happening? Well, now the current price of the Nasdaq is 71.4975, where the moving average is 71.40. Okay, so basically you need a pretty strong retracement, okay, which could happen. But you do need a pretty strong retracement to be able to take this trade. And when the market trends so strongly, especially we are 15 minutes away before the market open, and you have heard me say before that when the market opens, normally you will have a push, okay? And if the push happens to be to the upside, so then it's kind of like this market will keep stretching most of the day, and we'll have a tough time retracing back towards any of those moving averages, okay? You could also certainly do breakouts and stuff like that, but that is not the methodology I will employ today. Today, I will be planning on doing what I said before. Join those computers, okay? In other words, buy close to the average, okay? And do it in a place on the chart where you know you already have on-field orders, which is the flying saucer. So that's what we're going to do. I'm not going to divert from that. But what if I cannot do it because that market moved already too much? Well, then we will play with different time frames, okay? And thanks to playing with different time frames, okay? Thanks to this little bit of checking different time frames, we will likely going to find opportunities to join this movement in a different time frame that is not the one I'm using now. So that's why I got the Word document. So I'll be writing a few more time frames that we will normally use. Okay. Good. So guys, before I change time frames or anything, let's look at the two key markets we always look when we do our sessions together for short-term income, for short-term trading. So I'm going to be looking at ESH19. Okay, ESH19, and this is the S&P, and here we got a UFO located at 2804. As you can see there, begin price 2804. The moving average is 2806. Okay, so if this retraces and comes into the UFO, you would actually be below the average. Okay, so the S&P 500 futures, it's not providing us with an opportunity to do that. If we look at the Nasdaq, and sorry, not NQH19. If we look at the Nasdaq, okay, so at this moment in time, okay, and it's a nice moment to look at the Nasdaq because we're using a 15-minute time frame below, and right now in Wall Street is 9:16 a.m. So what does that mean? That the bottom candle just updated, okay, and because the bottom candle just updated, the moving average also just updated, so it's a fresh calculation. So 71.42 is the current number, and if I was to place my 71.42, I would end up with this particular location is 71.4175, and you know what? I'm interested in that. Okay, I am interested in that And the reason why I'm interested in that is because if this market keeps going down to find the average like it did before, obviously the average will have to react to the new price of the last candle and therefore move down a little bit. So even though it's 42.6 now, it may become 71.7 or 71.5 or something like that, and may fall within this green UFO. Now, I'm making it a condition that for me to execute the trade, I need the moving average and the UFO to line up. Okay, this is a condition. It has to be. Okay, if it's not the case, then I'm hoping for the best. Okay, I got the AutoUFOs working for me, which again is good enough, but I don't have those computers working for me the way I said before. Okay, so I want both because I want quality, I want probability. Okay, so we're gonna be watching this Nasdaq market. So to just watch it, I'm just gonna put it here on the right part of my screen. Okay, so I'm just gonna move it here. And I'll be watching it. Something you could do as well when you have an opportunity like that in front of you is maybe you can set some sort of an alert or something like that. So I'm just gonna go ahead and, for example, here I'm gonna have a line and I'm just gonna format horizontal line, alerts, and I'm gonna say enable alert, alert when the condition is true, intrabar, and yeah, so that's it. I got my global messaging preferences already set. So, let me see that. Global preferences. So I got a visual pop-up and an audible. Okay, so you could send an email to yourself as well. Okay, so what TradeStation is going to do is that it's going to give me a pop-up if the Nasdaq drops and hits my blue line here located at 71,483.87. Okay, so I just want to be alerted if it's going down so I could reassess the moving average. Okay, so I'm going to leave it there on the right while we look for other market opportunities. Okay, so what did we say? Well, we said that when looking at the combination 15-minute / 2-minute, okay, when looking at this combination, okay, when looking at that combination, we didn't find anything at the moment. Okay, so what are we gonna do? We're gonna move to another collection of time frames, but we're gonna do the same, but instead of 15 and 2, we're gonna use 60 and 5. Okay, so 2 different time frames. Okay, so what am I gonna do? I'm gonna come in here, and where it says 15, I'm gonna type 60, and I'm gonna go on the upper part, and where it says 2, I'm gonna type 5. And now I have a similar setup, okay, with the Nasdaq. Of course, all the values are different, but again, notice how, again, one more time, comes to the average bounces. So those institutions are using many computers, trading many time frames, and that's what I'm trying to take advantage of. Okay, I want to be precise thanks to the UFOs, but I want to rely on those computers because they create a lot of trading activity. They have the power to move the market, so I want to participate of that. So what do we have here? Well, here the average is 71.34. Well, 71.34 falls somewhere here, and unfortunately, 71.34 it's basically white space. I don't have UFOs. Okay, so yeah, a computer may show up and buy, but you don't have unfilled orders in the market waiting to get filled. That's not happening. Okay, so this is not going to be a good idea to trade the Nasdaq because I am only meeting one condition, but not the two. So let's check the S&P. I change now the symbol to the S&P, ESH19, and I'm going to do the same thing. What am I looking for? I am looking for UFOs around 2804. So what is 2804? Well, 2804 is right there. Okay, so actually, no, it's not going to be good because the bottom part of this box is 2804.75. The average is below. And if this market falls to reach the UFO, then the moving average will go down a little. So it may be pointing at 2801, 2802. And therefore, 2801, 2802 is white space. So what do we have? We don't have an opportunity for the S&P or the Nasdaq with a collection of time frames, 60 and 5. So what else are we going to use? Okay, well, we can also look at the 4-hour time frame, 15-minute time frame. That's another combination that is going to be quite useful. So what am I going to do? Just move in here where it says 5, type 15, and where it says 60, I'm going to type 240. So I change the chart to the 4-hour time frame. So 4-hour time frame below, 15 minutes above. Okay, notice how again you have the same phenomenon, gets to the average bounces, gets to the average bounces, gets to the average bounces. So again, those computers are out there, isn't it? So let's plan on the trade. So with the S&P, we got the average at 27.96. Well, unfortunately, 27.96 is below this UFO. And again, if that market falls, okay, we're gonna reach that UFO, and the average would have fell down further, maybe 27.93 or something like that. Okay, so what would that mean? That you are buying because of the average, but you don't have the UFO on field orders. So we are not gonna do it. So what do? You do it with the Nasdaq. Let's check the Nasdaq. So what do we have with the Nasdaq? Okay, same story. You can see on the 4-hour time frame how the moving average is doing its job. Again, this will happen every single day, every time we get together. Okay, it's not because I say it, it's because computers do this. Is that making sense? Computers that belong to institutions. So what do we have? We have an average located at 7107. 7107 is somewhere here. And what happened at that price? No UFOs. Okay, so should you do the trade? No, because you have one condition, but you don't have the two. So what do? We are not going to do it. Okay, and now that I did all of this, I'm going to stop here. Okay, why? Because if I go for larger time frames, now I will not be doing short-term trading. Okay, and nothing wrong with that. Okay, nothing wrong with that. You know, some of you sometimes send emails to us and consult with us how to kind of do a very relaxed style of trading where you look at the markets, you know, in the evening hours or something like that after you're done with work, and place a few orders and execute a few orders throughout the week. You know, trades that last, you know, maybe a couple of days, 5 days, a week and a half. Well, you could follow the same rationale. Okay, you could certainly follow the same rationale. Okay, maybe now you go for the daily time frame. Okay, and instead of the 15, maybe you use the 60 minutes. Okay, so you could do these things. Okay, but I'm not gonna do it because today's session is short term, and therefore I'm just gonna stick to the short term trading. Okay, so for short term trading purposes, okay, we are only looking at 2 markets at the moment. Okay, the 2 markets I've been looking at in futures. Okay, are the ESH19, which is the S&P 500 futures. Okay, trades in the CME. Okay, and I've been looking at the NQH19. Okay, that's the Nasdaq 100 futures. Okay, also trades in the CME. Okay, I'm focusing on those contracts at the beginning because it's kind of an easier starting point, if you wish. Okay, and now we're gonna look at spot forex currency pairs as well to do the same thing. Okay, and now just keep in mind that what I am applying to the Nasdaq and the S&P is something that you could apply to crude oil, to gold, to the 10-year note, to natural gas, to corn, soybeans, you know, copper, you name it. There are many, many, many futures markets. Okay, many, many futures markets. Just to be a little more descriptive, let me go ahead and click here where I have my main workspace here. Look at that. Okay, so maybe you want to take a screenshot of this. Okay, you have all those markets here. Those are some of the most liquid markets in the world. S&P 500, the Nasdaq, the Dow Jones futures, the Nikkei futures, the Russell futures, 10-year note, 5-year note, 30-year bonds, crude oil, gold, natural gas, copper, silver. Then the currency futures, Euro contract, Japanese yen contract, British pound contract, Australian dollar contract, Canadian dollar contract, Swiss franc contract, the dollar index itself, corn, soybeans, wheat, sugar, coffee, live cattle, lean hogs, cotton, and cocoa. Okay, so many, many, many markets for you to apply the same thing I am applying today to the S&P and the Nasdaq. You could do that. Okay, now some of those markets are a little trickier. point values are different, they trade less hours per day, they gap more intensively. So there are certain things that need to be addressed before we trade them. So that's why today and in future sessions as well, for a while, I will be concentrating the most in the S&P futures and the Nasdaq futures. Okay, but we'll add more markets as we go. Now, for the spot forex, okay, we can do the same. But I do have an indication that I want to tell you, which is the collection of timeframes that I had at the beginning. That would be only for futures. Okay, this one would be only futures. Okay, only futures. Okay, and the reason why is because if I change this to the euro US dollar, for example, and by the way, the euro US dollar is a very liquid currency pair. But let's say I do the New Zealand dollar US dollar. Okay. So let me have this data loaded on my screen. How are you guys? Chuck, very good to see you. Brian, very good question, Brian. Let me get your question in the main screen so we can talk about it. I'm just noticing your question right now. So let me get it on the main screen. Okay, so Brian says, do you ever look at volume charts like the 1000 for the Nasdaq? And you know what? You are absolutely right. Okay, this could be another very, very interesting way to be more precise with joining the moving average with the on-field orders. Instead of looking at minute time frames, okay, we can use, okay, we could use share bars, okay, also known as volume charts, okay, or we can also use tick charts, okay, tick charts or tick bars, okay, or tick charts, okay, which is another way to look at the UFOs, okay? And if that's okay, I'll do that later. So I can give you an example of that. But it becomes a little trickier with those type of time frames. So I will need to add a little extra information there. But that's a very, very good question, okay? So let's talk about it afterwards, okay? I think I've seen the market is about to open in 1 minute. So I can see the Nasdaq is coming down. So you know what? I don't want to miss this trade in case the trade happens. So I'm just going to move back to my 2-minute time frame, 15-minute time frame. And after the US market opens, then I will concentrate on the currency spot forex. Okay, so let me go ahead and be ready here to take the trade. So we have 71.42 at the moment. So we are still above the UFO. So I think it's looking good for a trade. So let me activate chart trading here. I'm just going to get my matrix ready as well. Oh, interesting. Interesting. Okay, guys. So I'm going to have to ask you to bear with me for a second. Sorry. Got a little problem with my TradeStation here. I need to do a reboot of TradeStation, so please bear with me. Okay, I'm just getting the, while I'm rebooting TradeStation, I'm just giving you a view of our beautiful website. Just in case you have never seen it, which I'm sure all of you have, but instead of staring at a blank screen, probably this is a better idea. Okay, so let me re-log in. So I am re-logging in TradeStation on my other screen, guys. Okay, so just bear with me. Almost there. Okay. Okay, so let's open the AutoUFOs. Here we go. TradeStation is now reloading. I think you can see this. Yeah. Okay, and it's now loading my multiple workspaces. I'm running 3 workspaces here. The one on the left is kind of like the generic UFO workspace, and then I have the Fibo lab and the EML lab. Okay, and today, as you have seen, as the session started, I started focusing on the EML lab. Okay, so here we go. So we are looking at the Nasdaq. So I wanted to change my matrix to NQH19. So now I have the chart of the Nasdaq and the matrix. Okay, and now we need to review certain things because earlier as I was talking about the different time frames. Okay, the time frames. Okay, I am highlighting. Okay, which is the time frame on the left. Okay, that time frame. That one is a special time frame in the sense that this is the one we use to identify the moving average, and therefore every 15 minutes, every 60 minutes, every 240 minutes, that particular time frame updates. And as this time frame updates, meaning that the candle stops and the new candle begins, then we get a new value for the average, which normally is significantly different. Okay, so notice how the new value of the average that earlier was 71.42, now the new value is 71.44. So we have the average now moving away from those UFOs. Okay, and therefore that's what I meant earlier, that sometimes it gets a little more complex, a little more complicated. When a market opens and it's just going, okay, sometimes it's complicated to catch the market unless you got in at the beginning, which we could have. But we would have needed a session to start like an hour sooner, which I was not ready for that. Okay, unfortunately. But anyway, so let's keep doing what we're doing. Okay, because I want to review to see what's going on with the S&P. I just told you to review everything every 15 minutes. So 2806. Okay, 2806. It's more or less up here. We don't have a UFO at this price, so again we're gonna have to wait. Okay, and no worries, guys, because even though now you see no UFO, and it may give you the impression that, oh my God, I'm going to have to wait so much, just be ready to take the trade, because sometimes you would be surprised. Notice that the upper chart is only a 2-minute time frame. You only need 3 candles to form a UFO. Okay, 3 times 2 is 6 minutes. So 6 minutes from now, or maybe 2 minutes from now, or maybe 4 minutes from now, we may have new UFOs forming, and next thing you know, they are lining up with the average. Okay, so just make sure that you are ready to double check your trades, often, so you don't miss the moves. Okay, here we go. So, like for example, here with the Nasdaq, we just got a new UFO forming. It's not lining up with the average. Okay, but it may line up in 10 minutes from now, which is when the candle below will update. Okay, so we'll see that. So we'll come back to the Nasdaq in 10 minutes. So we have 10 minutes of time to look at the currencies. So let's move to the currencies. And by the way, guys, I'm moving quite quickly in today's session, okay, because obviously it's market hour. So ideally, I would like to find market opportunities that you guys can actually execute. But let me go back to the currencies and continue the comment I started. I was saying that for the 2-minute time frame, we only use futures, okay? Or another way to say that is no forex, okay? And the reason why we don't want to use forex with this combination 15 and 2 is, if you were to do it with forex futures, maybe okay, but with spot forex, certainly not. You can see how much wiki those candles get. Okay, and one of the reasons could be because of the time of the day where there is a little less liquidity, whatever. But also one of the key reasons why this is a little disturbing is because spot forex market does not trade in an exchange, and it's a very, very, very significant market. It's the biggest market in the world by far. Nothing compares to forex when it comes to the size. Not even futures. Futures is actually quite small compared to forex markets. So those markets are humongous, okay? But the problem is that there is no centralized exchange. How can a market be so big? Well, because it's worldwide, because you trade with the banks directly. So there is no exchange in one city, in one place. And therefore, what happens is that different banks and different brokers may come up with slightly different prices for the currencies, and that's why you got all these wiki action as well and distortion. And on top of that, in Forex, because we don't have an exchange, when you load a Forex chart like the New Zealand dollar, US dollar, the problem is that what you see when you type that symbol is what is known as the bid price of the New Zealand dollar, US dollar, where when you buy, you don't buy the bid price, you buy the ask price. So if you wanted to see the ask price, which is not needed to do when you trade centralized products, okay, New Zealand USD, you will need to add .a at the end of the symbol. Instead of NZD USD, you will need to type, as you will see in just a second, NZD USD.A. So when you add the .a, basically you are telling your TradeStation computer that this is now showing you the ask price. When I trade futures like ESH19, okay, I don't need to do that. Okay, there is no need for me to do that, because what I get, I don't get the bid or the ask on the chart. What I get is the actual price that was traded in the exchange. It's called the last. So you have the bid, the ask, and the last. When you trade futures, you get the last on the chart, but when you trade Forex, you don't. So if you get the bid or the ask, you don't get the last. Okay. So what does that mean? Well, what that means is that then it would be recommended to not to go for such a tiny time frame like the 2-minute time frame. You want to give yourself a little bit, more wiggle room, if you wish, for this slight difference in price between brokers, between banks, when it comes to the currency markets. And therefore, I would say that going below 5-minute time frame puts you in a problematic situation. Okay. And sometimes even 5 minutes is quite tight. So if you wanted to, do 60 and 10, that would still be okay. So you can do that too. Okay, 5 is fine, but if you don't find what you want and you want to do 60 and 10, it's okay too. So I have the euro. I want to change it to the 60-minute time frame. Okay, below. Okay, so here we go. And then above, I have the euro, and I'm going to change it to the 5-minute time frame above. Okay, and the question is, what do we have? Well, the euro is above the moving average. Okay, and you can see the moving average is acting as a support, as we have seen many times. Probably here on the left there was a UFO earlier, but now this has been traded already. So we are waiting for the euro to have some sort of a green UFO lining up. Okay, lining up with the average. Okay, which we don't have. So what do you do? Well, you go for another currency or another time frame. Okay, so what I'm going to do is go for multiple currencies with this combination of time frames. Okay, and if I don't find anything, well, then I'll change my time frames until I find a trading opportunity. Okay, and we should be able to find something to trade. Does that make sense? Some days you load the charts and you're flooded with trades in front of you. Someday you load the charts and it takes a little more time to find them. Okay, but if you keep persisting, you should find your trades. Okay, so what do we have here? Well, we have a trading setup. Okay, where the prior candle closed below the average. Okay, so this candle, the close is below the average. So technically you're in a downtrend. So you would want to short the Great British Pound around the average with a red UFO. Okay. Well, we don't have a red UFO around the average. Okay, because the average is below price. So what we have below price is a green UFO. So in other words, the Great British Pound, it's not providing what we're looking for. So what do? Go for another currency. So we did the euro and we did the British Pound. Let's stay in Europe. Let's go for Switzerland now. So we go for Switzerland. US dollar Swiss franc, that's the Swissy. Here we go. What do we have? We are in an uptrend. The prior close took place above the average. Okay, so we are in an uptrend. Now, this uptrend has an average located at 99.85. So 99.85 is up here. Okay, and we don't have anything green at 99.95. Okay, we have the green located at 99.90. Okay, so in this time frame, the Swiss franc is not a valid candidate. Okay, so let's keep going. Okay, and by the way, one thing you could do as well is to do like I have in this desktop. where you can have a radar screen. Let me show you how to do that. So you can go ahead and copy. Oh, here. You can copy, okay, and then I can bring it here to my okay, I didn't copy it. Interesting. So I'm gonna copy window, bring it to here, and I'm gonna paste window. And now I have my radar screen here. Okay, and I could go ahead and move it here, adjust it. Okay, so I can do all of this. Okay, and now what I could do is I can get my radar screen linked with the blue color. Okay, so I got the blue color for the linking. Okay, and therefore now if I type anything I type, okay, or I click anything, it's gonna show up on my chart. So here in the bottom I have certain currency pairs. So I'm gonna go for the Australian dollar, US dollar. Okay, so it's loading. And what do we have? So we have an average around 71.68, okay, and that's 52. So we will pass on that one. The New Zealand dollar. And by the way, in 2 minutes, we'll go back to check the Nasdaq because in 2 minutes, we'll have an update on the average and the 15-minute time frame. So what do we have here? We have a moving average located at 68.85, and we got 85 is right there. Okay, so the problem is that 85 is the bottom part, so it's a little too tight. Okay, so will not work. We got the yen. We haven't looked at the yen. So let's look at the yen. Looking at the yen, sometimes it takes a little bit of time because it's getting the information from the cash folder. So what do we have here? 110.73.6. So yeah, a little not the best entry anymore. In the prior candle you had, okay, so if we had done this like an hour ago, I'm just gonna show it to you so you understand. You know, the average was 72. That would be lining up with this box, okay, and yeah, it didn't get to the average, very, very close, but it didn't get. So yeah, that would not be a trade. Okay, I thought it was, but it would not be. And then we got the US dollar, Canadian dollar. Okay, and what do we have here? We have an average at 131.39, and this falls right below this green box too. So this is quite interesting. We went over a whole collection of markets, and we ended up with a similar problem for all of them. Okay, so it's a little bit of Murphy's Law today. But hey, my friends, this is trading. Sometimes you find many trades and many profits. Sometimes you find many trade and many lose. Sometimes you find few trades and they all profit. Sometimes you find few trades and few lose. Sometimes you find no trades, and you need to keep looking. Okay, so we just need to keep looking. Okay, so my next step will be to look at the 240 15-minute combination. But before I do that, the clock just ticked. I'm gonna go back to my 15.2 and check on the Nasdaq NQH19. 2-minute time frame, okay, 2-minute time frame and 15-minute time frame below. So we have now the average calculated at 50. Okay, so 50 is, yeah, so now we have it. So we have a setup now. So 50 falls in between the green UFO. You see, guys, patience pay. Okay, so this UFO is 50. And the average is 50. So what are we planning to do? We are waiting for this to fall. And the moment this falls into this UFO, we're just gonna go long, expecting a movement to the opposite side to happen. Okay, why? because of the unfilled orders, and because of the trend, and because of the computers trading the averages, and because of all those things that we said at the beginning part of the session. Okay, so we need to plan a trade here. Okay, and therefore we need to look at where the entry should be, where the target should be. So I'm gonna let me type it on the screen first, so you understand what I'm looking for, and then we'll put it all together. So I'm looking for a final target. So if I'm gonna catch this move, once this market retraces into the green UFO and I go long, and I'm gonna catch this move, I want to have a proper expectation for where the price is going. I'm gonna call this my final target. Somewhere along the way, I'm gonna take partial profits to remove the risk of the trade. I will call this a safety target. And of course, the green UFO will represent my entry, and somewhere below, I will have to use a protective stop. Okay, and my entry, I said it, and I think it's clear, but just in case, it's gonna be a long entry. Okay, so these are the 4 elements of the trade I need to find out. I need to decide on those 4 figures. What is the price at which I buy, and where are the prices where I would sell in case I'm right or in case I'm wrong. So the prices for me to enter long, it's actually quite simple. 7153.75. Okay, 7153.75. Okay, and by the way, guys, you guys feel free to replicate what I'm doing on your computer screen. And if you have any comment, or let's say I made a typo and I typed the number, one of the figures wrong, make sure you tell me. Okay, so let's work as a team to put the trade in place. Now the stopping point, I want it to be below 46. Okay, so I'm gonna make it 71.46, and I want it below, so I'm gonna go one tick below, which is 71.46, 71.45.75. That's gonna be the location for my stop, right? And the difference between those two things is what my risk will be. So what I need to plan now is where to take profits in case I'm right. Okay, and I could go ahead and scroll my chart down, and if I had loaded information enough on my chart, I would see red UFOs here, and this will be the place, this should be the place where to take profits. Okay, this should be the place where to take profits. Okay, but at the same time, if I load too much data on my computer screen, you know that TradeStation has, let's call it limitations when it comes to how much CPU power of your computer TradeStation could use. Okay, no matter how powerful your computer is, and therefore you probably received an email as you're using the app. You probably received an email from our predictive team where you were recommended not to surpass 1,500. Okay, I'm using a Fibonacci number, 1,597. Just for the ones of you who like Fibonacci, you may want to use that. It's fine too. But if you were to use a very, very big number, well, now you would get red UFOs above. But what's the problem? The problem is that your computer may, depending on the time of the day as well, if the market is open and there is a lot of trading activity, your computer may actually freeze because of what I said. Okay, so we're going to have to, and by the way, I need to run because this is coming to our entry. So we're going to have to find an alternative method on how to do that. And by the way as well, I am using a contract which represents the expiration date of the Nasdaq futures market. Because the market has been going up quite intensively since the beginning part of the year, I may not have red UFOs on this chart. Okay, so one way to double check that actually would be a better way is to look at the continuous contract to see if I have red UFOs or not. So if I look at the continuous contract, okay, and I scroll down, do I have red UFOs? Okay, well, no, I don't. Okay, I don't. So what does that mean? Well, it means that this market has been going up a lot, and therefore I'm going to have to use another time frame. And to use another time frame to find the targets, I would just recommend you to go down the list. So go for the 5. If I go for the 5, okay, so it's loading. So going for the 5. Yep. I know what's happening here. So I will kill the download below. And this should fix the problem. Okay, so 5 minutes. Okay, so we have a red UFO forming as we speak, but above we got nothing in the 5. So what do? Go for the 15. Okay, do we have anything on the 15? No, so go for the 60. Do we have anything spending data? So I'm just going to wait here for the PD to disappear because we need that data from the left. So let's just wait. Okay, should be closed now. Come on, come on. Okay, well, it's taking a while. It's really taking a lot of time. But we're traders, so we'll be patient. Just looking down, and I can see it's coming towards the average, and I will feel terrible if I was to miss the trade. Okay, so anyway, so on the 60-minute time frame, I don't have red UFOs either. So what if I go to the 240? If I go to the 240, okay, here we go. So now we got something in front of us. Okay, and so basically, if I zoom in this thing, you can see that market went exactly to where the flying saucer is and turned from there. And that's 71.67. Okay, and I found that on the 4-hour time frame. 71.67. So 71.67, keep that number in mind. 71.67. If I was to place that number on the NQH19, 71.67. So what does that mean? So, you know, notice how in the NQ it doesn't seem to be anything at that price, okay? But we need to respect that because again we are dealing with a contract symbol. Oh my God, we should be in this trade, my friends. Yeah, so I'm gonna make it blue. Okay. Well, we kind of missed it, isn't it? So yeah, in this case, really, it is a trade. In this case, we are dealing with a trade where the amount of distance from entry and target, it's not too much. Okay, so what I'm just gonna do here, I would just take one target, okay, which is not the favorite way on how to do it, in the sense that you get a better win-loss ratio relationship if you use two targets, okay? But since we got very little profit margin here, so we're gonna do it like that. I'm gonna go with one contract. One contract. Here we go. One contract, and we're gonna go one stop, one target, and this is right in my zone. So I'm just gonna go market with this. Okay, and I'm gonna have to move my stop very, very quickly. My stop needs to be located at 45.75. So I need to move my stop a little further down. So 45.75, this would be a location for my stop. And then my target, we wanted 67. So I prefer to do this, to be honest, with chart trading, when the amount of dragging that you have to do is intense. I feel much more efficient with background dragging, okay? But anyway, so we have it. We're in the trade. So we'll see what happens, okay, in this trade, okay? We're in. We entered where the UFO is, okay? Notice how the entry is a little above the average, okay? So that's why I like to execute these trades in front of you, so I could make a series of observations, okay? So the trade is a little above the average, but remember the average is still lining up with the UFO. That, by the way, the UFO went away, okay? Why is it? Because every 2 minutes the chart updates. And what happened, let me show you. What happened is that if I activate hit hide UFO and I make it false, okay? So what happened is that price went and used the majority of the orders from the inner circle. Remember, the inner circle represents, okay, the inner circle represents where the algo understands that you have the greatest concentration of unfilled orders. So what's happening here is that because we hit that price level and many of those orders were filled, so the basically, visually speaking, when you have this condition as true, hide, hit UFOs, what this is telling your trade station is, okay, don't show me that UFO anymore because I don't want to rely on it anymore. You know, you still have a few unfilled orders left behind, and you know, we may be in a good trade based on the rationale that I explained earlier today, isn't it? But at the same time, you know, the UFO has been hit deep, and therefore, you know, you don't want to re-enter or anything like that. And visually speaking, TradeStation basically just removes the UFO from your screen. Okay, so now we're having some push here. Okay, so you know, we'll see what's going to happen with this trade, but we are doing what we are supposed to do based on the rationale explained at the beginning part of the day. Okay, and let me see how we're doing with time, because we got, in theory, we got 2 minutes left for the session to be over. But I would like to take a look at the currency markets in those other time frames. Okay, so let's do this. I'm gonna leave the Nasdaq here alone. I mean, we have the trade, the entry, stop, on the target, so we'll come back later and see what happened. But what I would like to do is go back to my currencies, and I'm going to use a different set of time frames now. I'm going to use the 240 and 15. Okay, so on the bottom part, I'm going to go for 240. Let me do it again. 240 in the bottom part. On the upper part, we're going to go for 15. Okay, and for the spot forex traders out there, let's go ahead and take a look at a few of the currencies. Okay, and if you don't trade spot forex but you trade currency futures, you can certainly replicate those trades too. Okay, so what do we have if we start with the euro? Well, if we start with the euro, so the UFOs are active and we have nothing of quality in the 50-minute time frame on the euro. What about the Great British Pound? With the Great British Pound, we have, let me see, we may have something here. Not really. The average is located a little lower, and the UFOs is lower than that, so not really. So moving to the Aussie dollar, yeah, and the Nasdaq trade moved against us. So I'll go back to the Nasdaq trade and we'll do some observations here. So I got 71.50, okay, and 71.50 with the Australian dollar lines up somewhere, let's call it in the middle of nowhere for the Australian dollar, no green UFO. New Zealand dollar, US dollar, so we're looking at the Kiwi now. So what do we have? 68.64, okay, and yeah, so this UFO could be a good entry once this below candle updates and the average moves up a little bit. So then we would have the condition met for you to be able to execute this trade. But at this moment in time is not the case. So what about the Swiss franc? If we look at the Swiss franc, okay, so what do we have on the 4-hour time frame? On the 4-hour time frame, we have the close is 10004, the average is 10000. So we are in an uptrend, technically speaking. We went from being below the average to the prior candle is above the average, okay? And therefore, as long as we have a moving average lining up with 10001, we could go ahead and go. I mean, you can see how price stopped at this price and bounced and started going up, which proves the point I was making earlier with those computers trading those technical indicators. But unfortunately, we didn't have a UFO. So you gotta be patient and wait until that happens. What about the US dollar Japanese yen? Well, with the US dollar Japanese yen, we have 110.73 is the average, okay, and we have this green UFO, and that one, yeah, that one is lining up indeed. Especially the inner circle is pretty well located with the average. Okay, so I will not plan the trade in the sense that I'm running out of time, and this session are supposed to be 1 hour long, but just for you to be able to practice the methodology, I would like to suggest a homework for you guys, and you can send the result of the homework to us via email so we can correct it for you and take a look at how good of a job you have done. But here would be a homework, which is plan on a long setup. Okay, so go for it, and you guys could plan on a long setup for the yen, because you do have a setup that is favorable to that. When is this candle going to close? Let me see. So 1 p.m., and my chart is currently set up to be, let me see. My chart is set up to be exchange time frame, so that's 1 p.m. New York time. Okay, so you still have a few hours to go until this candle closes. But once this candle closes, okay, the average is likely to go up a little bit, and that's going to make the trade even better. So this trade will likely qualify. So as a homework, you can plan on a long setup. Okay, and the reason why I'm giving you homework as well is so you can also do the practice on your own, not only following what I have done. You can also do the practice on your own and have someone to take a look for you. Okay, and the Canadian dollar, well, you need to wait for the candle to close above the average if this is going to be a change of trend, and plan the trade afterwards. Okay, so guys, let me go back to conclude the session for today. Let me go back to the Nasdaq. Okay, let me go back to the Nasdaq. Let me reload the information we had on the chart so we can understand a little better what happened. Okay, we could understand a little better what happened. Obviously, you saw what happened. We've got stopped out on this trade, but I would like to go ahead and analyze this a little better. Okay, and the lesson to be learned here, to be honest, is when you plan your trades, don't rush. Okay, that's a little bit of the lesson to be learned. Which, of course, when we get together, and I need to juggle with planning the trade and also giving you a certain explanation, kind of sharing what I have in the back of my mind with you guys. Sometimes this will have me rush, and that's never a very good advice. Okay, but anyway, this is trading. Being human also implies making mistakes, and it's not like I made a mistake here, but I could have been aware of something which I want to share with you that I didn't fully realize when I took the trade. Okay, so what happened here? Well, remember, the blue dot is the price at which we got in. The purple dot is where the stop was located. So basically, we lost this bunch. Okay, not a big deal. This is part of trading. But look at the chart below. The entry and the stop both are significantly higher than the average. Okay, and the reason why is because the UFO I had at that price level, if I could, yeah, unfortunately I cannot have it drawn again because price went through. So even if I change the settings for the hide heat UFOs, it would the platform would not show it. But you saw it earlier. The UFO that we had here was quite wide. And because it was quite wide, it was something like that, more or less. It was that wide. So because it was that wide, I was kind of expecting that as price comes into the UFO, the moving average will go down just by a little bit. But what's the problem? The problem is that because this thing is so wide, my entry price that was in the middle or upper part of the circle was actually still quite far from the average. And what you want to do is, and this implies manual, manual action. You have to watch this manually. When I'm conducting the sessions, we're using one monitor. Normally at home, if you're trading for intraday trading, probably you use 2 or 3 monitors, something like that. So you need to watch this manually and make sure that when the price enters your UFO, the moving average is close by, which is not my case. And the reason why I'm saying that is because if instead of using that UFO, I had used the next one, or I had combined both of them, right? So it's like you had, let's say this blue line is like the moving average, okay? And the moving average it was lower because we never got, hit. We never came close to the average. So let's say this blue line, let's make it purple so you understand better what I mean. Let's say this purple line is the average I have below, okay? Something like that. So maybe it would have made much more sense, okay, to merge either the upper UFO and this UFO together and treat them as one. So my stop, instead of 71.45, which is here, maybe have my stop at 71.40 or something like that. Okay, so 5 points below, and that probably would have made a difference. And therefore, at this moment in time, as we speak, I would still be in the trade on my way towards my first target, and hopefully on my way towards the final target too. Okay, but anyway, so lesson learned here a little bit. Okay, and not ideal. I really not an issue with the P&L being negative, but not ideal that I made a little mistake with the execution, and I have to acknowledge that for you guys. So when you practice this yourself, when you do the homework, if you wish, or you practice this for yourself, you don't make that little mistake that I just made. Okay, guys. So make sure that you keep that in mind. Okay. But having said that, again, I'm running out of time, so it's time to conclude the session today. How did it go, my friends? How did it go today? Give me a little feedback. Chuck, I see you here as well. Oh, the EuroCAD, okay. Okay, the EuroCAD in the 240-minute time frame. I remember you had a question in yesterday's session related to Forex. We are running out of time. We are supposed to close the session, so if you guys want to go, just feel free to go. But Chuck, if you have a question, I'm more than happy to stay with you a few more minutes as well and give you your answer. Okay, so please go ahead and type that in the comments box if you want to do that. Yeah, good point as well, Mark. Good point as well. And by the way, and there is one more thing I want to say, because as we spend time together, we'll get more evolved, and I'll add more and more rules as we go. But what I have not discussed yet to this point is rules for trade management. So you saw this trade at times was actually in profit, and we could have done something about it, right? So I'm not saying out of fear, out of greed, out of whatever, go ahead and close the trade and make $20 where you are risking 150. That would not be the way to do it. But if you were to have rules, okay, to manage the trade during the life of the trade, and that was to bring a little more safety, so that could certainly be a good idea. Okay. Yes, Milan, good point as well. So I'll make a comment when it comes to the share bars. Okay, we'll have to do a sharpening session for that, though. Okay, I'll just make a little comment so we are all in the same page. But what you're asking right there, that could take me hours. Okay, so I'll just make a comment and then I'll keep that in mind to do a sharpening session. Okay. So let me go ahead and reload my 240-minute time from here. Okay, so Chuck got a question here. So let me copy your question on the main screen, Chuck. Here we go. So Here we go. So Chuck says, how do you manage a trade where you take a short position at a red UFO and have nothing below, then a green UFO develops in a lower time frame as price moves? Good. That's a very good question. And by the way, your question has to do with trade management, okay? Which is what do you do during the life of the trade? And this is so true. This happens, okay? Sometimes you plan on a trade and it's looking like it's going to be the trade of the week, right? It's like, oh my God, I got a 25-1 here in front of me. My final target is so far away. I love it. Let's take it, right? And you take the trade, and 2 days later, 5 hours later, whatever that is moved nicely. Okay, but then starts forming rival UFOs. Okay, so in this case you are short, and now you see green UFOs form. So how do you treat that? This is your question, Chuck, which is a very good question. Well, the easy answer is it depends. It depends if you use one target only, or you are a trader who scales out. If you are a trader that uses two targets, like you have seen me do most of the time, where I use target one, which I normally call safety target, which is mathematically calculated at 1-to-1, just to remove the risk of the trade, and now you are risk-free. Well, that's one story. If you don't use multiple targets, if you don't scale out, that's a different story. Okay, so story number one: if you scale out and you have already reached your safety target, a very valid approach is to ignore the green UFOs that form in the lower time frame. Just ignore it, because the plan of your trade was not a plan relying exclusively on the UFO. You were also relying on the trend. I mean, let me pause here, Chuck. I am assuming that you were following the methodology I just explained, which obviously you're an expert trader and you may have a different methodology. So if that's not the case, ignore what I said, okay? So if you had other reasons to be in the trade, let's say the trend, and the trend is still in your favor, but you just happen to have green UFOs form in the lower time frame, and you have already reached the safety target, so you cannot lose, I would just leave it alone, because you had a bet, and your job as a trader is to be disciplined and follow the plan. And let's follow the plan, and that's it. That's what I would propose to do to maximize your profit. Sometimes, yes, you'll be stopped out at break even, and it's a shame. But you know what? What about the day you reach your target? So now you just made a 25-1. How many trades would that count for? Does that make sense? So at the end of the year, it would normally make a positive difference. So case number one, if you have already reached your safety target, just follow the plan of the trade the way it was at the beginning. Case number two, let's say you use one target only, and obviously you haven't reached your target, and now you have a green UFO form in the lower time frame. So my recommendation would be that if you have already surpassed 1-to-1 or more, then set that new UFO as your new target. In other words, change the target to a nearer location, okay? Take the profit and replan a new trade with the same currency pair, if the same currency pair allows you to. But don't stay on the trade and hope for the best, because you have evidence of on-field orders against you that are pretty fresh, precisely because they are from a lower time frame. Okay, so that would be my answer to you, Chuck. Hopefully that's what you needed to hear. If that's not the case, please let me know and I will clarify, okay? Milan, you were asking about those volume charts and tick charts, and earlier we had a question about it as well with Brian, okay? So let's take a look at that. So I am now looking at, on my upper chart, at the Nasdaq, okay? And I'm just gonna maximize my screen. And you can see on the upper left, it says 240-minute time frame, okay? So what if I type 1,000 shares? Okay, well, if I type 1,000 shares, it's gonna give me a chart. And it may take a little bit of time because I have this habit to clean my cache folder often, and sometimes the share bars and the tick charts load a lot of information. But anyway, it loaded, okay? And what do we see here? Well, we see a chart, and it looks like any other chart, okay? But what's the beauty of this chart? Well, the beauty of this chart is that every candle has the same weight. Every candle is made of 1,000 contracts, and it doesn't matter if the candle was created at 4 in the morning or it was created at 4 in the afternoon. Every candle has the same weight. Every candle has 1,000 contracts per candle. So that, I would say, this is going to be the chart where you find the greatest reliability. Okay, just like that. Now, if that's the case, an obvious question would be, okay, Jose, so why do you use time charts? Why don't you always use share bars or tick charts? Okay, because you can also use, for example, the 233 ticks. Okay, and again, now every candle has the same weight. You have 233 trades per candle. No matter if it took a while to form because it was at 4 a.m. or it took no time to form because it was at 10 a.m. Doesn't matter. Every candle has the same weight, 233 ticks. So that's beautiful. And those charts are probably going to be the most reliable you will ever trade. So again, back to the question. So if that's the case, why don't we use this all the time? Okay, and this is the answer. This is the answer. When you look at different futures markets, let me add volume, not because I care much about the volume, but because I want to make a point. You will see right now. Okay, so what do we have here? So volume, and I want to look at the volume average. Okay, so I'm loading the volume average. Okay, and the moment I'm loading volume average, well, it's not going to load for all the markets because the username I'm using doesn't have all the data feeds activated, as you can see at the moment. But let me do this because this color doesn't work for us. Let's do volume average. I'll make it purple color. Okay, so everybody watch the purple color. Notice how the S&P 500 has a volume of 1.6 million contracts a day. This is the average volume per day, where the Nasdaq has an average volume of 500,000. So let's call it 3 times less. 3 times less. So what does that mean? Well, it means that if what I want to do, okay, so if what I want to do, it's to use tick charts, and let's say I agreed that I like 233, right? Let's say I agree that I'm happy with the 233, but instead of the Nasdaq, you want to trade the S&P, okay? You want to trade the S&P, and the S&P has 3 times more the volume because it's 1.6 million instead of 500,000, and I'm just running it up 3 times more. So instead of 233, you may need to use 3 times more, which is like 700 ticks. So what for the Nasdaq would be 233, for the S&P, okay, if you wanted to do something equivalent, so now I'm loading the @ES, which is the S&P 500 futures. So for the S&P, the moment it loads, I will change the tick time frame or the volume time frame to a value which is 3 times more. Why 3 times more? Well, because the S&P has 3 times more trading coming in every day, and therefore what I just said, I think, makes a lot of sense. Okay, so by the way, look at those very ugly candles. So what happens now if I change this to 699? You will see how those candles, magic, it's kind of like, you'll see, it's like they look neater. Okay, and again, it's taking a while because it's loading in my cache folder, but you can see how it looks neater now, isn't it? It looks neater. Why it looks neater? Well, because 233 is too small for a market that trades 1.6 million contracts a day. Okay, now what if you were trading I don't know, the Euro futures? Well, the Euro future is 177, right? So that's 3 times less than the Nasdaq. Okay, so instead of trading the 233, maybe for the Euro futures, you need to do like the 80 ticks, okay? 80 ticks per candle, okay, to be properly adapted. Okay, So that's why, and when we conduct basic training, basic sessions, typically, I'll give it priority to keeping it simple, and doing something powerful enough and keep it simple. But guys, very good questions. I love the questions, and believe me, my intention is to get more evolved and more advanced as we spend time together, and we basically speak the same language. Okay, guys, because obviously all of you in the group are coming from different places, and different experiences and so on. And I would, I need to adapt to all of you guys. Okay, so as we spend time doing sharpening and then getting together, so we'll get to a point where everybody is very, very advanced. I know some of you are very advanced at this moment in time. My goal is that all of you end up being very advanced, and then with the UFOs, you have your mechanical action in the marketplace, and then you just kill it. Okay, so that's the plan. Okay, Mark, that was great, Jose. I have never thought about the fact that lower time frame levels have to be fresher than higher time frame levels. Yeah. I mean, the classical school of thought out there would suggest that the higher time frames are very, very relevant. And yes, they are very relevant if, let's say you're a market analyst and your job is to explain what happened in the market today, and the market just broke all times high, or the market just is trading at the highest price of the year, or it's just bouncing off a support in a monthly time frame. So yeah, to produce a report as a market analyst, the higher time frames are very relevant. But when it comes to order flow, and we live in the world of computer trading, my friends. In 1995, markets are electronic. When it comes to computer trading, things are often counterintuitive. Okay, and so those little thoughts, okay, are actually quite important. So glad that I caught your attention there, Mark, because it's an important thought. Anyway, everybody, guys, super pleasure to spend time with you here. I'm 23 minutes beyond the closing time of the session and loving it. Okay, so if you had to go, it's all good. If you chose to stay with us, hopefully it's because you're having fun too. So thanks for staying, guys, and I will see you tomorrow. Tomorrow we have another session. We'll be doing longer term tomorrow. Okay, well, I just said it very quickly, isn't it? Let me confirm. It's tomorrow. I think so. Tomorrow, 26, right? I know it's tomorrow, but for a minute, I kind of felt it was not tomorrow. But since I'm loading the website, just like, let's make sure it's the case. Yes. 22 hours and 35 minutes from now, we'll be together, guys. 26th of February, longer term, 9 a.m. US Eastern time. Okay, guys. By the way, since I'm on my website here, quick comment, guys. Please, everybody, on the YouTube channel, click on the subscribe button. On the Facebook page, click on the like. On the LinkedIn, click on the follow. And it's not only about marketing purposes and stuff like that, which obviously is also appreciated. If you see one of the good trades that we do and you share with your friends and stuff, of course that's nice. But really, it's also about being properly communicated. Is that making sense? When we post trades and you get them real time, that could help you. And if there is any special announcement or something that we have to make, so that way we are connected real time. Emails are very useful, and we certainly shoot emails, but the world has changed a lot, and social media and instant messaging and all that stuff is very useful. So just explore our pages out there and just click on the button for liking and so on. By the way, in YouTube, if you subscribe in YouTube, don't forget the little bell. People always forget the little bell, and then you don't get the reminders. Okay. Anyway, see you tomorrow, my friends. Take care. Bye bye.